I just want to make sure someone could just type in main chat again if they can hear me fine, or if they could just speak up in chat, just tell me if they can hear me fine. Sweet, okay. Well, I know I see a few new faces here. Not faces, but profiles or username, whatever you want to call them. Just to give a brief intro into myself, my name is Kevin. I'm currently 21. I actually turned 21 10 days ago. I've been trading for 9 years now, and I've done pretty well, in my opinion. And I've been on Discord for a few years, and it's just come to a point where, it's not all about just having all paid courses and stuff like that, so why not spread the education I wish I had? Back then when I started trading, like 9 years ago, there wasn't YouTube was obviously there, but it wasn't as popular as it is now, which meant there was less materials that you look over, less people to follow, less live streams to follow, less valid courses to follow. So it's definitely hard for me to learn, and I realized over time that if I could give you guys that, or some kind of portion of that, then why not do it, So that's why I created this server. Again, don't mention any other server name. I know that you guys, since you guys came here, it obviously means that you guys are from a server I lured in, so yeah. Well, let's get started on the questions. Again, sorry about my voice, and sorry, we were supposed to go over volume analysis today, but 2 days ago I was with my friends, and we were around a fire pit, and the fire was really big, and I kind of fell asleep. And yeah, that's how boring my friends were at that time. I fell asleep and I inhaled so much smoke while I was asleep that the next day, which was yesterday, and today, I've had a horrible headache on top of cough and a sore throat, and then on top of that, I have like extreme pollen allergies. So that's beautiful, right? So unfortunately, we have a Q&A session instead of a live session about volume analysis, which I'll plan to do sometime this week, maybe Thursday. Because I do want to give myself some time to recover and everything. So, yeah, but we'll just get started. This is not going to be a long live. So, yeah. The first question is, what % daily overall portfolio growth do you look to achieve as your average? Well, so there's a good and a bad to this. It's good to set yourself goals, but it's good to set yourself goals, like, appropriately. Let's say, like, appropriate, what I mean is if you look to grow your portfolio 1% per day, that's an appropriate percentage, because even 1% at like a much more bigger account, right? Like we're talking 5 figures or 6 figures. It's a lot to reach that point. So you don't want to just give yourself a high percentage of portfolio growth each day, because that could lead to over trading, diamond handing, contracts, which is not a practice you should really have. I don't believe in diamond handing or just holding contracts, even if they're in the red. So definitely look to have an appropriate percentage. I would say an appropriate percentage is around 1% of growth per year. Not per year, what the heck? Per day. And I'll show you guys something here. Actually, it's right over here. Let's just say we had, what's like the average amount of money people have in their accounts? $1,000 or $2,000? Let's just do $1,000, right? And you look to grow at 1% per day. And since there's 252, that's months, there's 252 trading days per year, right? If we don't withdraw any of the money that we make for a year, and let's just say every month we put $25, and we started today, which is the 29th, we could approximately reach 6%, not 6%, $6,000 by the end of the year. You might thinking, oh wow, that's not a lot. That is a lot. All these small gains, they add up. It adds up a lot. And just look at it this way. If you were to look at the monthly section, I'll put the link for this in the announcement tab. But if you look at this, right, it sets like goals which you need to have per month. I'm pretty sure in the first month you can make $20, right? If you're doing everything right, if you're having proper risk management, you're not gambling, you're not lottoing, you'll definitely make more than $20 in a month. You know what I mean? So it definitely it you can go ahead of schedule and even beat what the projected amount is, and that's again only having a 1% growth per day, right? Let's say if you do 3%, which is actually pretty hard to attain on a daily basis, you could reach this. And that's a crazy number, right? That's why, again, I said maintaining a 3% on average portfolio growth is really hard. It's not something you should push towards, it's something you should have come into your lap. And what I mean by that is don't force trades to reach 3%. If you find a good setup and if you have proper risk management, that 3% growth will just keep on coming to you, if you know what I mean. So don't rush into any trades. But yeah, usually 1 to 3%, usually 1 to 2% is actually a safer thing. 1% is obviously the best thing you want to look at. 2%, you could reach 5 figures from 4 figures. So basically, to answer your question. But the next question is, what percent gain of your account do you stop trading? And what percent loss of your account do you stop trading? Well, for the first one over here, let me just put a check mark on this so I just know that I answered it. So for this question, that's not a question I asked myself. Well, okay. I trade when there's good setups, and I trade when I can actually keep track of the trade. What that means is, right, if I could keep track of the trade, if I could, like I'm a college student, right? So if I have class and I know that I'm not going to be able to look at my trade during class, I'm not going to be on the, I'm not going to trade or enter a trade, right? So first of all, I stop trading when, I just don't trade when there's not good setups and whenever I don't have the time to track the trade. So, sorry, I had to cough there. But yeah, so if you set yourself a percentage, right, sometimes that percentage might be higher than what you've gained that day, and that might lead you to risk and force trades, like I said earlier. So that's not just something you want to do. But an important question is, what percentage loss of your account do you stop trading? I'm guessing you're talking these questions, Chris. You're probably talking about like daily, not overall, but like what Chris is trying to ask is, how much percentage do you lose per day where you just tell yourself, okay, stop trading? Well, you don't necessarily have to tell yourself to stop trading for today. You just need to take a break. And I always do that if I have 2 consecutive losses. As you guys see, anytime I have 2 consecutive losses, I just stop. I just say I'm going to take a break and I'll be back later on the day or the next day. So definitely, you don't need to stop at 1 loss, but after 2 losses, you should just, tell yourself, okay, let me take a few second break, because obviously if you're just losing twice in a row, you're either rushing into your trade, you're not waiting for good setups, you're not being patient, or you're just gambling at that point, right? And we're all guilty of that. No matter how good of a trader we are, we always end up finding ourselves gambling or rushing into trades. I'm guilty of that too sometimes. But the next question is, how many contracts do you buy each trade? It's not so much how much contracts you buy. The way I go into it is, the best rule of thumb is, whenever you get into a trade, you don't get into a trade more than you don't get into a trade using more than 10% of your portfolio, right? So let's say you have a $500 account. You don't open a trade that's more than $50, if you get what I mean, because 10% of $500 is $50, right? So you don't want to enter, you don't want to have a position that's larger than $50 when you start off. You can, the most you ever want to do is 20% of your portfolio each trade, but think about it. Let's say, God forbid, you get into a trade with a $500 account and use 20% of your portfolio, which is $100, right? Let's say your Wi-Fi goes out, or let's just say your laptop died or your phone died and you can't keep track of the trade, and that trade goes to zero. You lost $100 of your account, and now your account's down to $400. The smaller the account you have, the harder it is to trade. So it's more just being able to get into a position using less than 10% of your portfolio, and also base the percentage on how confident you're in the trade, right? So if I'm very confident in a position, I'll go with, for example, 10%. If I'm not as confident, I'll go with like 5%, right? You know what I mean? So hopefully that answers your question. Best time frames for scalping. Let me see, I think, did Joey answer this? No, he did not. So what I personally do, it comes to personal preference. 3 minutes is what I always look at for day trading. 3 minutes and 15 minutes is what I look at for day trading. Scalping is more 3 minutes, while day trading is more 15 minutes. If you want to swing trade, you look at 2 hour, 4 hour, right? And daily. So hopefully that answers your question. The next question by Krish is, how do you prepare for the trading day? That's pretty simple. You either wait till the market closes that day and you make a watch list or set levels or draw out supply or demand zones, which again you guys could check if you head to live recordings right over here and you go to this video. I go over my strategy of how to plot supply and demand zones, which are very, very, very important to trade off of, right? It's something that institutions use, and institutions are the ones that move the market, so why not try to actually look at what the institutions are looking at, right? So definitely watch that video, because unfortunately we don't have the time for me to explain that right now. But definitely watch the video. It's a little bit lengthy, but I promise you it'll pay off. I've only gotten good remarks from it. So yeah, so either look at it the day before or plot out these levels before the market opens. That's just the best way you can prepare for the day. Ron, I'm just gonna mute you for a second because your mic is on. So if you need to speak, just let me know. The next question is your most accurate indicators of choice. Okay, well, I trade, if you guys actually see my charts, I don't really go based off of indicators because almost every indicator in the market is lagged, while the two live indicators that are in the market are price, right? Price is basically bars that you see, and volume, right? So this is volume and price are the leading indicators. That means that they update in live time. While lagged indicators such as Bollinger Bands, EMA, MACD, right, like right over here, these only update and they move like while the price is going on, but it's using data beforehand, right? That's like the best way I can explain it. And you guys can correct me in the chat if you have a better way to explain it, but that's basically what lagged is. And obviously, if an indicator is lagged, it's less accurate compared to sorry, I just had to mute someone here. It's less accurate compared to the leading indicators, which is price and volume, right? You can obviously use indicators. So the reason why a lot of people ask me, why do you only use price and volume, right? Well, that's the indicators that the institutions use, right? They also use the VWAP, the 9EMA, and the MACD sometimes, but the two indicators that that most institutions always go off of is price and volume, right? And that basically is price analysis and volume analysis. And as I said, again, today we would have had a live on volume analysis, but my throat's really bad. Like, it's already hurting right now speaking, so I definitely could not have a lengthy live session about volume analysis. So I'll look to do it like maybe Thursday night or something like that. So hopefully I'll get that. I'll have a live session on that day. But price analysis versus volume and price analysis and volume analysis are the two important things you can learn in the market, other else in risk management. And once I teach you guys that, I promise you, like, even it's good to follow analysts. I'm not saying it's not, but now you can actually look at what they're seeing and see why they're entering it, right? If they follow price and volume analysis, and that could give you more confidence into entering a trade with them or not entering a trade, right? Instead of just blindly following a trade and then ending up in the red and being like, damn, wait, why did I enter that? Sorry, excuse my language. But yeah. But the indicators I use is basic price, volume, VWAP I sometimes use since institutions use that, and I'll briefly tell you what I mean by that. So volume, I mean, not volume, VWAP, if you guys didn't know, it stands for, whoa, sorry, let me just remove these other bands, just give me just 1 second. So if you guys didn't know, VWAP stands for volume weighted average price, and what this means is, let's go to IWM. What this means is basically this line is basically the average price, right? It uses like a formula that has volume and like the shares traded, and it like divides it by the price or something like that, or it's something like that. And the institutions use this to find a good area, to sell or buy shares, right? So you can use it to, like, let's say for example, this is market open right here. You see IWM trading, and you see it bouncing, trying to trade into the VWAP and above it, but it kept on rejecting, and it finally got rejected really strongly here, and then it started trending downwards. Basically, what this means is we were over here on the bearish sentiment, right? We were trading below the VWAP, and every time the stock, which is IWM, traded into the VWAP. Sorry, my throat's like killing me right now. The institutions would start selling, right? Because this is an average price, or this is a good price for them to enter or trade or exit a trade. So they kept on selling and selling, right? And this is what eventually collapsed. Not collapsed, but brought IWM down. So you could see it that way, or you can use VWAP in that way. Same way for what I'm trying to say, for trading into a bullish side, right? Like right over here, we see it testing the VWAP, got rejected. But then we see it testing the VWAP, it broke above it with good volume. As you guys can see, it's a little bit larger volume compared to the volume that was there before. It broke above it, it maintained it, and sorry, I had to cough there. And then it broke above it, and because it broke above the VWAP, it remained bullish, right? So if the stock is above the VWAP, it's bullish. If it's below the VWAP, it's bearish. Testing the VWAP can also indicate whether it's going to break down or break above. So just keep that in mind. But yeah, let's go to the next question. So again, the indicators I personally use is volume, price, right? Those are the indicators I use the most. I sometimes use a VWAP, and I use the MACD for swinging. You guys will see again how I used the MACD in one of our previous live sessions. I have it recorded. Let me link the channel so you guys can easily see it. All right, let me put it in now. No, wait, where should I put it? I'll put it in live recordings. But yeah, so hopefully that answers your question. What indicators do you use? Chris, you're useless. That person just asked that question. Just kidding. Chris is my friend. So, when to cut losses? The best rule of thumb is always cut losses below 20% when it comes to contracts. When you become more confident in trading and you're able to enter your own trades, right? Instead of cutting at like a 20% stop loss, you can go according to stock price, right? So let's see, what's a good example right here? Okay, let's say we're trading IWM, right? Because it's IWM. Let's say we're trading IWM and we bought puts right over here, right? Let me see. We bought puts right over, let's just say we bought it. Oh, you know what? No. Let's say we bought it right over here, right? Let's say we bought puts right over here. You can set your stop loss to this top right here, right? So here you're basically saying if IWM breaks above this, right? If it breaks above this, then I'm going to exit my puts, because if it breaks above this, because it's the high of this candle, right? If it breaks above this, then it's more than likely that IWM is going to be more bullish versus bearish, right? So then you could go according to that. So even if the stock goes up, right, and it still doesn't reach that range, it dropped down like it said, right? Like it shows right here, and then it rises up again, but then it gets rejected, and then we would have been profitable, right? Because we didn't get stopped out, because we had this stop loss according to the stock price and our own technical analysis, and we could have just kept the option, which is again risky, right? Holding on to options is always risky if you're in the red. So that's why only when you gain confidence you go according to stock price. But the best rule of thumb is any stop loss below 20% is appropriate. You know, the higher the stop loss you have, the more risk you give onto yourself, which means the higher chance your account could go in the red, which means the shorter amount of time you have in your trading experience, right? So when do you average down? Well, okay, averaging down, I know analysts do that, and I do that too. It's not, and I don't do it often at all, but it's not really a good practice. The reason is because it's very risky. The only time you average down is when you have really solid technical analysis and you're not holding 0 days to expiration contracts, right? So let's say if today was Friday and it's like 2 p.m., which is 2 p.m. Eastern, which means that the market closes in 2 hours, and you buy like IWM puts, right? Let's just say it was 2 p.m. around this area, let's say we bought puts around, let me just clear this. 1 second. I'm sorry if my voice sounds bad again. But let's say we entered puts at this area, right? And obviously this is a bad entry because it's right next to a demand zone. So let's say we entered puts for some reason at this area, and we want to average down because we feel like, oh wait, you know, IWM is gonna keep on sinking, or is gonna keep on trading to the downside. If you keep on averaging down, you could see, for example, that it will just work against us in the end, right? The smartest thing to do is to just cut your losses and look for a better setup, because if you're in the red, why give yourself more chance to lose even more for a setup or an entry that did not work in your favor, right? Let's say we entered puts over here like our previous example, and this is obviously a bad entry, right? Let's just say we entered here, right, and the contract lost like 20% or 30%, and we want to average down. You could use, for example, like the VWAP as your confirmation, right? So if it broke above this, then you would sell. But let's say it's still below this and you see it rejecting, then if you average down like over here, right? Why can't I draw a circle? If you average down like over here, because obviously the price of the contract is going to be cheaper up here, then, you know, makes sense. But then still, regardless, the risk is so high to average down that it's not really worth doing. So instead of averaging down, just look to instead just cut your losses and just look for a better setup, or just wait for a setup to come to you. Because in the market, you can't be a wuss. You have to be a man, right? You have to just admit your losses, take your losses, and just do better the next time. Think of it like this. A good quote that one of my friends said was he showed me was, empires don't get built on excuses, and that's true. And basically averaging down, if you're related to that quote, your mistake was entering at this bad entry, right? For example, right here, you averaging down is just an excuse to give a potential payout for your option trade. But if you keep on doing this, if you have this habit of averaging down, you're going to eventually get into this continuous habit of just averaging down, and it's going to work against you eventually. Because most of the times your average downs are not going to pay out, right? Unless like you're very advanced and you know when to average down, like I do, not to gloat, but obviously I've been in the market for 9 years now, right? So when I do average down, I know when to average down and why to average down, right? So then that makes sense. But if you're just starting, if you're following an analyst, right, or you only been trading for a year or two, don't just start averaging down. Just cut your losses and move on, you know. So hopefully that answers your question. Okay. Who are your guides and inspirations on a daily? Again, I didn't have mentors or anything. I didn't have inspirations, to be honest. The only inspiration I ever had, two inspirations, was money and my dream project. I always liked making money ever since I was young. Around the age of 12, I used to. There's this when there was like this mobile game called Madden Mobile. It was like a football game, and on there you can build a team basically, right, with all these football players. And I used to. There's like a obviously an in-game currency in there, right? So basically, you would buy these cards or these players using the money in game, and using what I would do is I would like sell accounts, right, with all these good teams, and I'll keep on making money from that. And then eventually I went and I started building and selling Instagram accounts. Then I created an app for a hospital that had to deal with dosage calculations and stuff like that. They bought it, and then I started trading. I started off with $300. You guys already know my account is now in the 8-figure value. But yeah, like I was always into money, so that's an inspiration. And then I realized that if I set myself a goal for trading, I actually would trade much more smarter, right? So for example, let's say a lot of people trade. A lot of the people I teach, right, or a lot of my members or any members for any server, they're always like, if I ask them what's their goal, the two main popular things is I want to have financial freedom. And the second one, which I find more respectful, is them always saying that they want to retire their parents, right? They want to give money to their parents. So think about it. If you're trading to retire your parents or give money to your parents, aren't you going to start taking smarter trades, right? Instead of dumb ones? So that's why it's very important to give yourself goals. And my goal was I set out to do a dream project, which is I live in New Jersey. Well, currently I go to college in Long Island, New York, but my main home is in New Jersey. I still live with my parents because obviously I'm 21. But my dream project is to actually purchase lands in Pennsylvania and Virginia to open up animal shelters, right? So because I love dogs, so that's what my whole purpose is for my trading account. And I like literally do not withdraw from my account. I've only withdrawn I think like 5 or 6 times, and I believe most of the times, yeah, were for taxes. So, like paying taxes from my trading and other stuff. And they've not been like, I don't live lavishly because if you want to reach a certain, what you quote unquote you call rich or comfortable lifestyle, you can't keep on spending all the way there, right? So that's just my goal. Sorry to go on about that, but basically setting yourself a goal will always lead you to have better risk management, smarter trades. But that's my inspiration, my goal, and money itself. I was always a money person from childhood. Sorry, I need to cough right there. Let's go back to questions. How do you know when to average down? Chris, are you asking questions that everyone else is asking? This kid. When is a trade invalid? Well, when's a trade invalid? When it breaks above your technical analysis, right? Or when you're at a 20% stop, it's 20% loss in your option. Just get out of the loss and just look out for the next entry. You know, the smartest thing you could do is just accept losses and just go on to another one. That's why I think about it. That's why there's the rule of only trading 10% of your portfolio each trade, because let's say you lose 20% on one trade, you still have 90% of your portfolio for the rest of the day to trade, right? I'm not saying you have to use 100% of your trade cash, right, of your portfolio up in a day, but I'm saying you still have 90% potential cash that you can use, right? So don't necessarily just look to how long you can hold a trade, but more just be smart about cutting your losses and stuff like that. Okay, so next question. Hopefully that answered your question. Any other traders you look at or collaborate with? Personally, no. This is nothing snobby at all. I personally don't look up to any traders or analysts. I have my own trading strategy, and I've been trading for 9 years alone now. No one has really helped me, you know. The only person I've looked up to is Wyckoff, I don't know how to say his name. That's a strategy I first learned, and it is one of the most complex strategies you could ever learn in trading, because it's basically using, I think this is him, right? Yeah, this is him, Richard Wyckoff, I'm pretty sure it's Wyckoff. But basically, the reason he made up a strategy, or he used strategies and outlined what institutions use and how they look at the stock market and how to benefit off of that. So when I first started trading, I looked at resources that explain that strategy, and I'm not kidding you, it took me months to nail it down. I am looking to overall explain the Wyckoff strategy in much more simplicity than it has to be. So like it's just some things could, as you guys can see, if you guys been here in previous lives, you guys know that to me the most important thing is to simplify things, because if you simplify things for yourself to understand, you're always going to remember it better, right? Not saying you just dumb it down to something to a point where it's just it's just incorrect, but I do value simplifying things, and I look to do that. So that's why we're starting off with not starting off, but we start off with supply and demand zones, because that's very important in the Wyckoff strategy, right? And then the next thing we're going to learn is volume analysis, which is again important in the Wyckoff strategy. And there's going to be price analysis, which is again very important in the Wyckoff strategy. And then and then in the upcoming weeks or upcoming months, we'll look to tie all of that information and knowledge together to basically give you guys a simple explanation of the Wyckoff strategy, right? Because there's no need for it to be as complicated as it is. Like, I remember when I first wanted to do option trading, and everyone made it, or all the resources I looked at made it so much more complicated. Is that proper grammar? I'm sorry. English is not my first language, so my grammar sucks, but no, I think it's way more complicated. That's the right way to say it. It was way more complicated than it had to be. And, like, literally, I just simplified it for myself, and ever since then, it's just, yeah, some things are just really, what's it called? They make it hard to understand. I don't know why. But, you know, I look to simplify it over the course of months. But next question is, in which all cases do you choose to average down rather than exit or get hit by a stop loss on the trade? As I said, I answered this question before. It's based on your setup, and basically your setup, and just, you know, the smartest thing is to just cut at 20% loss. You know, it's just not more than that. But I did King Cats. I did answer that before, since there was a similar question. Rod asks, answer this question. Depends if you believe in the play. What is your risk tolerance? Did you originally plan to average down, or are these things you planned before the trade? I agree with most of this, but you should never go into a trade knowing that you're going to plan to average down. If you're going to plan to average down, then don't even get into trade. Just wait for a better entry, right? If you miss the trade, oh wow. Like, today's a perfect example. I had, I don't know if you guys saw my chat, not my chat, but my alerts. I had this perfectly plotted out demand zone on the 24th. I'll show you guys the alert too. Let me go to my analytics server, so I'm not actually promoting any paid server, right? This is just where I post the alerts for my bot. But if we go to the 24th, right? March 24th. Oops. Just ignore all that. Where's the 24th? The 24th. Jeez, okay. Sorry if that annoyed you guys. But where is it? Where is it? Okay, here. On the 24th, we way before the 24th, I actually plotted a supply and demand zone, right? And it's the same price point, which is 203.04, and you guys can see I have the same demand zone right here. And basically, I had this plotted out. And wait, just quick question: you guys can see my my screen when I transfer my screen to geez, I can't speak, but you guys can see my screen when I go to Thinkorswim, right? Can you guys type in main chat, one of you? Just so I know that every time I go to Thinkorswim, you guys can actually see it. Okay, alright, just to make sure, because sometimes like Discord like pauses the chat, or not pauses the stream or something, so I just want to make sure. But so right over here you can see that there was a demand zone that I plotted, and if we actually entered according to this demand zone, we could have had a huge, I remember it like went up from 203 all the way to like 205 or something like that. We would have made, you know, huge profits off of that demand zone. And again, we had the same mistake where I had this demand zone, I had an alert set up, and it triggered, but I was not feeling well at all today, so I had a huge migraine. You guys know why I'm sick, so I'm not gonna get into it. The alert triggered for me to like look at it. I did look at it, but then I fell asleep literally while looking at it, which was horrible because there was a perfect entry for calls right here, right? So just wait for setups, because you could see on the 24th we had the perfect setup of getting into calls right here, but we obviously didn't enter because it was too late to enter, right? Same thing happened here again, like, but you could just refer back to that. Even though we missed this opportunity, there was an opportunity again today, right? So that's what makes averaging down not that crucial. It's more just being patient, waiting for the next setup, right? Because we could have entered in the trade again. We could have entered into calls right over here on this perfect bounce of the demand zone. Again, I didn't change this. This is the power of demand zones, by the way. You just look how perfectly institutions go off of it. That's what I'm saying. Just go and I linked my channel again in the announcement. Oops, in the announcement tab. Let me just show you guys for the people who just joined right now. Nope, I did not post it there. I posted live recordings. I posted the YouTube channel right there where I post the recordings of these live sessions. And this video right here is probably the first most important video, and this is second most because this is the second part of this video right here. So I deeply recommend for you guys to watch this video and then this video. It's not even based on views. I'm not even trying to pump views at this point. But you guys should honestly just watch this. It's one of the most informative videos I could put out there. But yeah, so just don't go into a trade thinking, am I gonna average down? Because if that's the case, just wait for a good setup. What was the best time frame to chart on day trading, and how far back should you look for support and resistance in supply and demand zones if you're day trading? When it comes to day trading, what I usually do is in the morning. Hold on, give me a second. In the morning, before the market opens, I usually just go on to the 4-hour and the 2-hour and plot out supply and demand zones, right? And if you guys remember from the supply and demand zone video, I did say the longer a zone is existing, the less chances of it for it to be respected. Sorry if that was worded weird. A huge example is this supply zone right here on SPY, right? This happened Monday, 4 weeks ago or something like that, 3 to 4 weeks ago, and you can see over time that this supply zone basically became invalidated because all these unfilled orders that were there in that area was just they got liquidated, right? The order got canceled or whatever, right? It got liquidated, and then when SPY tested this, it wasn't strong enough. The zone wasn't strong enough anymore because of the long time that passed for it to be respected, right? So you want to just look for zones within 3 to 2 weeks, right? 3 to 2 weeks, basically, like that. And it's the same thing for supply and resistance. The more times, the longer supply and well, I mean, supply and resistance levels kind of have a little bit more leeway when it comes to time deterioration compared to support as supply and demand zones, because supply and demand zones is an area where there's unfilled orders versus support and resistance or price points where there's just been a bounce or rejection. It's not really based off of like orders selling or buying at that point versus the zones. But the same rule applies to supply and resistance versus not supply and resistance, support and resistance versus supply and demand zones, which is the more times a zone, right, or a level gets tested, the weaker it gets, right? So just keep that in mind. It's always best to plot out your levels or what's it called? Levels or zones before the day starts, whether it be after market close or before the market opens. And then usually once I plot out these zones, I stay on the 3-minute. As you guys can see, I stay on the 3-minute and the 15 minutes sometimes. But mostly I look at the 3-minute when it comes to day trading. That's again my personal time frame. That's what I like using. How to find an edge. When you ask this, I think what you're trying to ask is what to find what you're good at. Well, you can't find your quote-unquote edge until you get proper risk management. And then after that, it's just basically getting the basics down, like knowing supply and demand zones and support and resistance levels, and like basic candlestick patterns, stuff like that, like head and shoulders, rising wedge, triangles, stuff like that. And then after that, you could see what works out for you. Usually supply and demand zones always work out for everybody if you know how to use them correctly. So again, learn that. And then you don't need to find an edge in trading, because if you try to find an edge in trading, you're just gonna think it's a game. It's not a game. So it's just more based on what you wanna what you're comfortable with. Like when it comes to time zones, go ahead and decide whatever you want, whether you want to look at 3-minute or 15-minute. Just know that the smaller the time frame, the more fake outs you experience, right? And the bigger the time frame, the slower the movement, but the less fake outs you receive, right? So, but then also in big time frames, you could potentially lose out or more profit, and on smaller time frames, you can potentially have more profit, right? But obviously, each one comes with risk and each one comes with cons. So that's just something for you guys to find out on yourselves, because I'm not a financial advisor. None of this is financial advice. It's just education I'm spreading to you guys for entertainment purposes only, since apparently that's what we have to say to not get sued. Research to learning different candlestick patterns. Joey was kind enough to post a link to that right over here, so you guys can check it out. How to use confirmation properly to ensure a higher success rate on trades. Confirmation, you basically use indicators. The indicators I use for confirmation is volume and price, right? And then sometimes I use the MACD or the VWAP. But it's basically using indicators and indicators and zones and levels. Basically, that's what gets you confirmation on a trade, and patience, of course. You don't just rush into a trade. And best indicators for confirmation: volume. Volume is the best indicator for confirmation, and that's why I'll go over it next live. But hopefully that answered your questions in some manner. What are correlated tickers to look for when entering on SPY QQQ alerts that help with risk management, and is it something worth focusing on? What you mean by I'm guessing what you mean by correlated tickers is tickers you could look at side by side with SPY or QQQ. Again, sorry if my voice is bad. Usually it doesn't sound as bad, but my throat is hurting me a lot. But for SPY, you could look at Apple, Tesla, stocks like that. I know you could also look at VIX to trade against SPY, right? Or SPX to trade with SPY. You could look at futures. You could look at ES to help you trade with trade for SPY, right? But I don't usually look at I don't usually look at correlated tickers. I just look at one ticker, not sticker, and I focus on that because I only have one monitor, right? And obviously I can fit so much on one monitor, so I just don't look at correlated tickers personally, and I found success not looking at it. But obviously, again, it's up to personal preference. So don't let my personal experience prevent you from doing something that might benefit you, right? But yeah, again, Joey put a perfect example of when is a trade invalidated. It's similar to what I said, right? So definitely take a look at that. Sorry, I just had the cough there. That's a question for Joey. Okay. What strategies do you mainly use and their success rate? Well, I started off using the Wyckoff strategy, which again I'll explain over time. And then I developed my own strategy from that, and now I just solely use my own strategy, but it's based off of the Wyckoff strategy. So, yeah. Hopefully that answers your question. The best thing you can do is not just keep on constantly switching up your strategy. Of course, unless it's not literally working out for you, then obviously switch it. But instead of switching your strategies, if it's somewhat working out for you or working out for you, just look to adjust it to fix any issues that you have, right? Do you base your entry off of zones or do you use trend lines as well? I use both, but I mainly look at zones personally. So, what do you consider a good setup? Well, Nader, good setup is basically where you have enough confirmation where you lose out on profits, right? Because confirmation is basically you being patient and waiting more of a signal that the trade's going to go exactly the way you would want it to go, right? So if there's confirmation, then you know that you're going to be losing out on profits, right? So what I mean is, right, let's say we look at IWM right here, where it bounced off this demand zone. We're obviously not going to enter right when it hits the bottom right over here, right? Because that's just way too risky. We don't know if it's going to seep into a demand zone and then bounce up, or maybe not even respect the demand zone at all, right? Because even though demand zones are usually respected, right, if they're fresh zones and validated zones, which again I explained in the previous video, but even if they're fresh or look like they're going to be validated, nothing's 100% correct, right? So we obviously want to wait for confirmation. As I said in the second part video to supply and demands, you could use the MACD to help with confirmation, and we could have entered when the MACD crossed right over here, the blue line in my chart crossed this yellow line, and we would like enter right over here, and you could sell, like obviously if we entered here, we would have more profits compared to entering here, but since we entered in at a little bit later, right, when there was more confirmation of this trend, this gives us this basically gives us confirmation that the trend will continue. It's strong, and we had volume also supporting it as well, right? So confirmation is basically when you're missing out on a little bit of profits and you're not chasing a trade. That's what a good setup is, and that's basically what a good confirmation is. If that answers your question. I had to step away. I answered that in the I just answered that a little bit ago. What am I going to school for? I currently go to Hofstra University in Long Island, New York. I'm going for, I want to become a radiologist, so I'm graduating in health science. I need to go to medical college. Then I need to go for residency, and then I'll become a radiologist. So that's another freaking 7 years for me since I'm in my 3rd year of college. What are your VWAP settings? Sorry, didn't mean that voice crack. VWAP settings, it's nothing special at all. I don't change anything. Everything's set to normal. It's just sometimes like on TOS, and I'm not sure on other trading platforms, it comes with an upper and lower band. These are basically similar to Bollinger Bands if you guys do know what Bollinger Bands are, but you don't necessarily need them. So if you want to remove them on Thinkorswim, like the lower and upper band, just click on the status's upper band, unclick Show Plot, and a lower band, and unclick Show Plot as well. And then VWAPs, just keep it as it is. You could change the color if you want, and press OK, and then there you go. You don't need to change any settings on the VWAP. other else than just hiding the other two upper band, the upper band and the lower band, if it pops up for you. Yeah. Okay, that's answering Joey's thing. If I'm taking 30 to 35% stop loss on options, what should I target for profit? Well, first of all, 30 to 35%. Obviously, it's up to you. It's your risk management, but personally, that's a little bit steep, right? And I'm pretty sure this is nothing against you, but I'm pretty sure you've not been training that long for you to have that much confidence in the trade, right? And that's nothing against you as a person. That's just I did not have that much confidence, even when I was 2 years in. So it's just because of your stop loss doesn't mean that you make your profit target bigger or larger. The best rule of thumb is just start trimming at 5%, and usually sweet spot is 10%. Because how many times exit or trim at 10%? Because how many times have you reached 10% profit on an option? You choose not to sell because you're afraid it'll go up, and your option and your contracts have just gone straight down to red after that, right? So it's not worth just holding it. So just honestly, your profit target should be 10%. 5% is obviously safer. 10% is the sweet spot for most. I usually start trimming at 5% if my confidence is not that high, and 10% is usually what I start trimming at. And trimming, if you guys don't know what that means, is basically if you have a bigger account, that means you can enter in a position with more contracts, right? Since 10% of your portfolio with a bigger portfolio is obviously more compared to a smaller portfolio, right? Like 10% of 500 is obviously less than 10% of 5,000, for example. So you could trim along the way. So I'll start trimming at 10% or 5% based on the confidence of the trade. But it's never just safe to just, if you want to hold a contract past 10%, at least like when it goes to 12% profit or 11% profit, or even when it reaches 10% profit, set a stop loss at 8% profit and keep on increasing as it goes. So let's say it goes from 10%, it goes to 10%, set your stop loss at like 8% or 5% profits. Sorry, I had to cough again. And then sorry, my throat hurts, that's why I'm coughing a lot. Sorry if that's unprofessional, but yeah, start at 5%, right? And then let's say it reaches 10%, have your stop loss at 5% or 8%. Let's say it goes to 15%, set your stop loss at 10%. You get the gist of it. Just keep on increasing as it goes, because even if you're holding it, you're at least holding with a stop loss. But then if you do that, make sure it's not a limit stop loss and it's more of a market stop loss, because if obviously the price goes up, that means the drop down, right, will be steep. So you don't want to be stuck with a stop limit order and have the limit order not be filled, right? And then your contract goes to break even or even red. So have a stop loss that's a market order. There's no need to shame someone if you're here. Everyone starts at a new. I was a noob once, right? I don't know why I can't complete my sentence. I was gonna say everyone starts at some time, right? So I was a noob at one point. I had these questions, so definitely don't be afraid to ask. That's not the mentality you should have. People are not as privileged as you to have the experience to know all these risk management things. Not to call you out, but I'm just saying. But yeah. Don't involve emotions trading, because that will just lead you to over trading, getting more red trades. But yeah. What do you think about 5-12 moving averages? Well, as I said, I only use price and volume analysis. I don't even use the VWAP as much, but they're good. But the institutions, what they use the most is the 9 EMA. So instead of using the 12 and the 5 moving averages, maybe switch to the 9 EMA and trade off of that. I actually had a friend of mine come on a live a bit back. This is his video right here. how to consistently be profitable in the stock market. He goes over risk management for those who wants to learn more about risk management. There's a video for it. He goes over that, and he actually learned from me, and he learned from my charts, right? And I used to actually go with this trading strategy that I made up that had to do with Bollinger Bands and the 9 EMA. So he actually briefly goes over that. So definitely take a look at that if you're interested in using 9 EMA for your trading and Bollinger Bands. It's not a bad strategy. I just personally found more success in, I just like the more complexity, but the efficiency of price and volume analysis when it comes to trading. Yeah, hopefully that answered that part of the question. I have high confidence in them and wanted to get your intel. Oh, you have high confidence. Okay, so it works out for you. That's perfectly fine. You know, stick to that strategy. I personally have not used them, so I can't really give you much, information about it. But in the past I've used the 9 EMA, and I used it for entering trades. Let me see if I could pull it up really quickly. Just show you a brief example, because it's getting late for me and I got a class at 7. Let's see. Yeah, it's already set to 9. Like, what you can do for 9 EMA when it comes to day trading is a simple way to put it. Obviously, there's more to it. If the trade trades above the 9 EMA and it holds above it, then you could enter into the trade, right? And then if it breaks below it, that's when you exit. So for example, right over here, you could have entered like right over here, right? And you could have exited right over here, right? If you wanted to wait for the close before 9 EMA. Same thing for the bearish side, you could enter right here or enter right here, right? And then you could exit over here. But obviously it's better just taking profits 10%, stuff like that. It's best not to always look at the 9 EMA because it's a lagged indicator, but they could definitely come in use. So I'm not shaming that indicator. I have no problems against indicators because people do find success in indicators, especially EMAs and SMAs. I don't know if some of you guys know Odriso. I think I said his name right. He's an analyst in a few servers, not going to mention names. And he's come with success using these EMAs and SMAs. So you can always find success with stuff, just as long as you use it properly. But in my opinion, the best indicators to use, again, I'll use it say it over and over again, is price and volume analysis. So that's again, I'll go over volume analysis in a future day, probably Thursday. How many and what tickers do you concentrate on? This is a very important question. I actually have never answered before, in terms of like no one asked me. Just always limit yourself to what you look at, because the more things you look at, the more you'll find yourself forcing trades, right? So I personally I look at SPY, I look at IWM, I look at QQQ, I look at AMD, I look at NVIDIA, I look at Tesla, Apple, because these are all like not volatile stocks, right? And then what else do I look at? Actually, I think this might be in order from which stocks I trade the most. So the stock I obviously trade the most is SPY, right? Then it would be IWM. I love IWM for its cheap contracts. It's similar to SPY in a way. And then it's Apple, then it's QQQ, then it's AMD, NVIDIA. Tesla is a little bit volatile. I'm not a huge fan, but sometimes if you do the right technical analysis and there's no news surrounding that day, you can easily profit off of Tesla. But these are the main stocks I look at, right? So if you keep on adding stocks onto your list, you're going to eventually just keep on forcing trades, because you'll be like, oh, here comes a setup on like AMD, for example, and then like another setup will come on NVIDIA, and then you enter into 2 positions at the same time, and then you can't monitor 2 positions at the same time accurately as you can monitor 1. So that's just, just limit yourself, but don't limit yourself, but definitely look at a certain amount of tickers, right? So hopefully this answers your question. I look at SPY, IWM, Apple, QQQ, AMD, Nvidia, and Tesla. SPY has been very volatile, and it's not actually been following as much technical analysis as I would want it to be. As you guys know, we're in a technical analysis market, and no, we're not in a technical analysis market, we're in a news market compared to a technical analysis market. And what that means is, like, during this time, right, during before the pandemic, right, and stuff like that, all of this was technical analysis. You could easily trade off of technical analysis, right? And let me get to a bigger time frame. Basically, all these years before, right? Obviously, this was not a technical analysis. This is more news, right? Because that was the crash, the market crash during that time. But during this time, technical analysis was the market was basically a technical analysis market, meaning that most of the times the market would respect your technical analysis, right? Because that's if you have good technical analysis, then it's going to most likely be respected. But even during this time, you could have proper technical analysis, but it will not be respected, right? So unfortunately, SPY has been very, very volatile. There's been news about, Ukraine, Russia, all the stuff with the Fed, rising rates, gas prices, stuff like that. So it's become more of a news market. So I've kind of stopped looking solely at SPY, right? Because I'm literally, you guys saw, if you guys didn't see, before it became like heavily a, what's it called? A market analysis, market. What am I speaking? Market analysis. News analysis market? I'm so stupid. I'm so sorry. You could see that I was doing more than fine, right? We had 48. We had 48 wins, and we had only 1 loss. Again, if you guys aren't talking, if you could please mute your mic, that'd be much appreciated. But yeah. So when it's a technical analysis market, I absolutely flourish, right? We had a 90% in March. But you could see not March, February. You could see in March, I did a few mistakes. We're down to 83%. But it's definitely something we could get by. We all have down days. That's why everyone keeps on asking me why you're not just day trading full time. Because, no matter how good you are, you're not going to be always consistent. You're going to have, you could always be consistent, but trading is not always going to be consistent for you. You can always have a bad month or even a bad year. Just like you could have a bad day, right? So I've been not having the greatest of months. 83% win rate is absolutely at no limit of bad win rate, but it's obviously bad compared to what I usually do, right? Because I was 98% February and I was 92% in January. So this was more of a market analysis, and that's what kind of trumped me a little bit. I did a few mistakes, like rushing into trades. But I switched up what I was doing. I realized that sticking to SPY is not the smartest thing to do, so I started looking at my other tickers as well, which is AMD, Tesla, Nvidia, and you could see that we kind of started doing a little bit better once I switched. But yeah, sorry I had to cough again. The next question is, where am I from in New Jersey? I was born in Bergen County, Westwood. And my current home, right, because I live with my parents, I'm only 21, even though I'm in college right now. It's in Emerson. That's where I currently live. So feel free to send me some free pizzas. How do I choose a good strike price for an option? My choices has been mixed. Okay, that's a question that's asked a lot. Actually, it's not a bad question, so I'll be glad to answer that. The best way to enter, the best options to enter are always options that have volume. And if your platform doesn't, sorry, excuse me. Sorry, I did not mean to burp there. I'm just very gassy from being sick. Professional of me, so sorry. But when it comes to contracts, you want to go with contracts that have the most volume. The reason is, let's say you get into a contract and it goes in the green, right, and you want to sell out. Obviously, if there's less volume on a contract, that means that it's going to be harder for you to get out of that contract, which will obviously lead you more than likely lose on that contract because no one's buying your limit order, right, or filling your limit order. So the contracts, when it comes to any strike price, the contracts that have a higher probability of having the most volume is tickers that end with 0, right? This is the contract with the most volume, and then tickers ending with 5. So number 1 is ones that end with 0, number 2 is the ones that end with 5. Obviously know that the farther out of the money you go, the less volume that you'll encounter. Same thing is deeper in the money you go, the less volume you'll find as well. So the soft spot is like right closer to in the money, but also on the edge of out of the money. So let's say we were trading right now. What I would personally go with is 450 because it's not too far away from the in the money contracts. But also like a contract like 453 would not be a bad one as well, even though it's not a contract that ends with 0. It's closer to in the money. It's also somewhere on the edge of being out of the money, right? So 452, 453, or 450 would be a good choice. So hopefully that answers your question. Basically, we'll go off volume. If you use the TOS Thinkorswim mobile app, if you go to the option chain for most tickers, you can actually see the volume and the open interest and the ask and bid size. So there's a tip for you. Wow, sorry for that voice crack. I can lose it all. I'm trading with money I can stand to lose for learn curve. Thank you for doing that. A lot of people just put in a lot of money without, realizing that way you can lose it all. A good example is, oops, I did not mean to add that. A good example is when I started. I'm a huge believer that you should not put a huge amount of money into something without confirmation of it paying out. That's what I have for any business that I invest in. Any contract that I enter, right? Even in trading or anything like that, you always wait. You need to be patient. So when I first started trading, I only put in $300, right? And I put into $300, and I actually took that to 24K, within a month. But then I did the stupid mistake of full porting like all of my trades, right? And eventually that worked against me, and one day I had an apple swing, and this apple swing was in the green like 2 days straight. It was a put, I believe, and then there was like bullish news after close one day, and it absolutely killed my contracts. And I literally went into like most of my portfolio, like above half of it, and it took my account from 24K all the way to 1K in a matter of like minutes right after market open. And ever since then, ever since $1,000, I've never full ported. I've not gone more than 10% or 20% of my portfolio in each trade, and I've been absolutely fine. I don't want to get into specifics, but we can say that right now I'm above $15 million on my portfolio, right? And it's all from proper risk management. It's from learning and obviously knowing and admitting to myself that there's going to be a learning curve, and all benefited me in the end, right? It's 9 years afterwards, and I've only benefited from my patience. So hopefully that, yeah. How many retests does a zone typically respect? Like, what are you talking about right now? So this basically going back to my previous thing I was talking about. I again went over this in the live sessions about the supply and demand zones. So watch the video on that to get a better explanation. But basically the rule is after it gets tested once, the zone is like when I mean tested, I mean the stock actually going into the zone. But once it gets tested once, the zone obviously gets weaker, right? Since supply and demand zones is basically an area where there's unfilled buying/selling orders, right? So in a demand zone, it will be an area where there's a bunch of unfilled buying orders, and a supply zone is basically an area of unfilled selling orders. So logically think about it, right? If the stock trades into, let's say we have this 203. Actually, let me get to a bigger screen. Let me just show you right here. Let's say we go into, let's say IWM, right? We have the demand zone right here, as you guys can see on my screen, on 203.04. Let's say it trades all the way down to 201. That means all the unfilled buying orders, right? Because this is the demand zone. All these unfilled buying orders will. Let me just extend this. All these buying, all these unfilled buying orders will get filled, right? Between that range. And what I mean is, like, let's say we reached a 201, right? Not 201, 202. All the unfilled buying orders in this area will be filled, right? Or not all of them, but most of them. So that means next time the stock in this situation, IWM, tests this area, there's more chances of it, trading into the area where it traded before, or even actually breaking and not respecting the zone. So that's why you have the most confidence when it's not tested at all, and you start losing confidence within the zone the more times it gets tested. So that's just a brief way. Obviously, the better answer is on the previous video. So hopefully I answered your question. Another question on the same topic: is this when the Fibonacci retracement comes into play? Or are there technical analysis to use to determine support and resistance? Fibonacci is a good tool to use when it comes to. Sorry, 1 second, I need to cough. When it comes to plotting support and resistance levels, but you could actually see in where was it? In this video that Hayden did, which is the other analyst. He actually talked about how to plot these support and resistance levels. You could use the Fibonacci as well. It's basically just look at a price point where something is respected more than once, right? Or even a low of the day, right? Or low of the week. That's or high of the week, high of the day. Those are basically support and resistance levels. But yeah. That answered your question. How do you set stop losses on contracts according to actual price of the stock or ETF? So if you have Thinkorswim, if you go on the mobile app, there's actually a way to do it. But again, I don't recommend doing that until you've traded in the market for a year or two, right? Or you're at least confident in your technical analysis skills. But there's a way you could do that on your TOS mobile app. If you can't do that on the platform, what you can easily do is just set an alert right near that price, and then you just manually sell it using a limit order or a market order. That's actually all the questions, unless you guys have more, so ask away. Did any of you guys have anything to say, any opinions, anything you guys disagree with me with? Anything at all, just feel free to ask or say. And of course, I hope that, these actually provide you guys with, these live sessions provide you with valuable information. Because knowledge is the most valuable currency in the world. My goodness, my throat is killing me. But yeah, do any of you guys have questions? You could just you could actually guys talk in main chat, not ask Bishop, since we're done with that. You can even type in questions right here. I'll give you guys 2 minutes or something. Sorry for again having this live session late. I just had class late and I had a project due, so colleges. What are some books or videos to watch for price and volume analysis? You can actually easily search up on YouTube. The only problem with that is they always overcomplicate things or they don't explain it in a better way. So I will look to have a live session. We were supposed to have a live session today on volume analysis, but I just have a migraine. If you guys don't know what happened, it was a dumb mistake. I was with my friends, and I was we had a fire going, and I fell asleep next to a fire pit, and I inhaled so much smoke, and it just gave me a migraine. Yesterday, it gave me a cough yesterday. I have a horrible throat, and on top of that, I have a dumb freaking pollen allergies too. So, we would have the the volume analysis lecture or live session, whatever you want to call it today. But we're unfortunately going to move it till maybe Thursday, hopefully. That's what I'm looking to do. Because that's a more in-depth video. That'll be like maybe 2 hour, not video, live session. That'll be like maybe even 2 hours long. But it's definitely going to help you guys in the end, right? So hopefully we'll try to do it on Thursday. I hope you guys can understand. It's my throat's been hurting me talking and stuff like that. So, I know at colleges I'm a professor at Rutgers. Oh, yeah, you're a professor at Rutgers. I actually applied there, and my wife is actually going to be transferring there soon. So, yeah, Rutgers is a nice college. Got a stupid biology lab report due tonight. That's why I had this live session so late. Oh, and if you guys are not in college, just wait till you have biology and chemistry lab, especially chemistry lab. It kills you mentally. It's so annoying. It's absolutely one of the worst subjects I've ever taken in my personal experience. You guys can love chemistry, it's up to you, but oh my goodness, chemistry lab is not for me. It was not for me. I still got a good grade, but I can't even start to begin talking about how much stress that brought onto me. Oh yeah, the investment calculator, I shall post it in the announcement tab right over here. So definitely you guys should look at that. The best thing when it comes to this, right? Just start off at 1%. And even though you might be thinking, oh, wait, that's not enough, it doesn't matter. You're still growing your account. You don't trade to get rich quick. Because if you trade to get rich quick, I promise you're not going to get anywhere. You trade to grow your account, right? So even though $6,000 might seem small to some of you, it's huge, right? Because let's say we end the year and let's say we only reach 5,000, right? That's not even 5,000. Let's say we only reach 4,000, and then we start the new year with that. We could take 4,000, 20,000, right? And there you go. Like you will eventually grow your portfolio. Look at me. I'm a prime example. I start off with $300. I did the dumb mistake of obviously full porting in the beginning, but then I started back at $1,000, right? After my significant loss on that Apple put, and ever since then, 9 years later, look where I am now, you know. So patience and vigilance will is vigilance the right word? But that will help you do well in the market. So what I was trying to say is you could look at this and you could look at the not the daily but the monthly like goals and stuff like that. So you could see, you know, oh, what should I get like each month, right? Or when am I ahead of schedule and stuff like that. But just if you might be below schedule, right? Let's say, for example, we had to reach $80 earnings for the month of March. If you're at $40 and the month is going to end in like a week or a few days, don't just start over trading. It's okay. You could be behind schedule. It's fine. But you never want to over trading make your account go red, that's for sure. What did you do to learn to wick off? Did you read a huge book, articles, or just watch videos? I actually watched a bunch of Sorry for whoever has their mic on, if they could just mute it. But I learned it off of books, and I learned it off of long lectures. It was worth learning it, but a lot of it, they overcomplicated stuff to, in my personal opinion. That's why I'm gonna simplify it for you guys. But I've definitely tried seeing if I can find those resources again. If you guys want to put the time into learning it, if you guys want to be patient and wait for my videos or live sessions about it, then I'll definitely be game, and I'll definitely benefit you. That's for sure. But yeah. Do you guys have any other questions or any other comments? Sorry if my voice sounds bad again. I feel like I said that 7 times this live session. Yeah, no, of course. Simplicity is the best way to learn, in my opinion. That's how I get through school and everything. Just put stuff into your own words and you'll find it easily stay in your mind. But any other questions or any other comments? I'll give you guys 2 minutes. It's 1:58, so I'll give you guys 2 minutes to type anything down. No, don't thank me at all. It's my pleasure. I wish I had this when I started. Would have helped me, Sorry, my throat's getting worse and worse. But if this is your first live with me, then don't worry. Your expectations will be so much higher for the next one, because this is just a Q&A. If you want to see how previous lives went, you could go to our YouTube channel. You could literally see these are live recording sessions, live sessions that I recorded. Our first session was on the wheel strategy, which is about literally a strategy where you could theoretically you could not like lose a trade, and it's used for bigger accounts and growth accounts. So look into that. This is the most important video I ever released so far, which is about okay, I just wanted to make sure that my mic is muted. Is about supply and demand zones. This is the #1 thing to watch, in my opinion, if you haven't watched it. Then risk management is what my friend Hayden goes over. His name is Neocentric in this live server. He's unfortunately not online right now. Right, so look at that. And then S&D zones. This is the part 2 to it. So this is basically how to plot it and goes over like the rules of supply and demand zones, right? And this goes over how to trade them and like how you could use the MACD to trade them. So yeah, so definitely don't. This was just a question answer thing. So how often do I have my live sessions? I can't unfortunately promise you anything. I can't say I do it every week or I do it every other day. I used to do it every other 3 days or every other 2 days, but I'm a college student. I have a wife. I have my family back home. I am in the end only 21, so I do unfortunately have limitations to how much time I have. You guys are obviously a priority to me in terms of educating you guys, but obviously before you guys, and this is nothing personal, and I hope you guys understand, like first comes my religion, which is Islam, then it comes my wife, my family, and my education, right? And then after that, then obviously I'll Discord and you guys as members in the server and other servers come as my next priority, right? So whenever I do have time, I look forward to doing these live sessions. But the next target for the next live session would be Thursday night. I'm not exactly sure, but we'll definitely look to have that recorded. Again, if I cannot do live sessions, I either pay or I get other analysts on these live sessions to explain a topic. Like recently, we had this analyst over here, if you see in the mentors section on the right side, we had miscellaneous come on and talk about futures trading, which I'm actually going to get into. I currently do only options trading, but I used to also do a bunch of penny trading, like penny stocks, and I never done futures trading. But since futures trading and forex trading deals with a lot of technical analysis, if you're good in technical analysis, then you could actually do very well when it comes to forex trading and futures trading. Sorry, excuse me. But yeah, I'm gonna get into that. I know I'm gonna have good success with that, so I'm excited for that. Just doing my research on it first, and yeah, soon I should also start sending out alerts and trading penny stocks. Which actually, if you guys didn't know, I used to be huge on Discord. I'm still relatively big right now, but 2 years ago I used to be in like 100+ servers, and then I took a break for 2 years because I got hit with COVID twice. I got married when I was 19. I had college, and Discord was kind of seeping into my college time. Right, it was kind of affecting my grades, so I took those 2 years to take off of alerting and Discord stuff. So when I came back, but what I'm trying to say is before that I actually traded penny stocks, and I had like a really high win rate on that. So I can't wait to bring that out to you guys as well. I know I'm gonna do futures soon as well, so I'm pretty sure I'll do on well as that as well. Why do I feel like I said well like 17 times? But yeah, I went off all on a whole rant there unnecessarily. Is there anything that you guys have, like comments or questions again? Again, sorry if I can't have the live sessions as often as maybe you'd want it. Do keep in mind, like, people kind of charge for this stuff. I'm not saying be grateful. I'm just saying, like, there's a reason people do it, because it does take time out of their day. It does, like right now it's kind of taking time out of my day, right? So what I'm trying to say is it's not always affordable for me to always do live sessions, but I always try to do them when I can. But I'll give another 2 minutes for question and comments. If we don't have anything, then I'll just end the live right there. Yeah, good night, guys, and no need to thank me. Unfortunately, this live didn't bring out as much information as I would have wanted it to, but hopefully it was a little bit helpful. So I'm glad. Since sorry, I had to cough again. Since no one seemed to have any questions, I think we're done for tonight. Good night, guys. Sleep well. Eat dinner if you haven't, because I haven't eaten dinner, but my stomach's not good, so I'm just gonna go to sleep. Yeah, good night, guys. Pleasure being on with you. Sleep well.